Hey everybody, Derek Bissen here, and today's topic is going to be cryptocurrency and whether or not you can use cryptocurrency to fund the down payment and closing cost with a mortgage in a real estate transaction. So the short answer is, well, no, you really can't use it, but there is a way that you can. So let's cover that, and let's cover a couple of ground rules and basics so that if you are planning to use cryptocurrency in your real estate transaction, that you don't get caught up in any way, shape, or form, and that you're able to get safely to the closing table. Without further ado, let's get started. All right, so first off, if you don't know what cryptocurrency is, this video is probably not for you, to be honest, because it won't pertain to anything you're involved in. However, if you are into cryptocurrency and you're planning to use it in a real estate transaction to fund your down payment and closing costs, then pay attention. This is really going to help you from getting your loan denied inadvertently, okay? So the first thing you need to know about cryptocurrency is what you probably already know, is that it's encrypted. So really nobody knows who you are. It's hard to trace these things back. It's by design, blockchain is designed to make sure that your anonymity is protected. However, in a real estate transaction, mortgage companies have a very different directive and mandate from the federal government. All right, so we as lenders have to go through your bank statements to determine where you got your cash to close and whether it was in your account and how long and all that other stuff. And we go through all your deposit activity, mostly to make sure that you don't have like an unknown benefactor in your transaction who's funding the whole thing. Okay, that would be a no-no. You're supposed to be doing it on your own steam, right? So cryptocurrency is treated by lenders the same as cash. So if you're unfamiliar, or if this is your first time borrowing a house, cash is not legal tender when it comes to a mortgage, okay? Maybe for everything else, but not a mortgage, okay? And the reason is because you can't trace cash back to where it really came from. And cryptocurrency is exactly the same in that regard, right? So let's just say that you provide your bank statements to your lender, and your lender sees, oh wow, you got this deposit from Robinhood or wherever you got it, and they trace it back, which is their job, by the way, and they can see that like half of it came from cryptocurrency. Well, they're going to take that $40,000 out. And if you needed more than $40,000 for down payment, closing cost, and reserves, then you're automatically not going to qualify, even though the money is literally sitting in your account, okay? We're not allowed to count cryptocurrency. So how do you fix this problem? The easiest way to do it is to plan ahead, all right? So you really need to be putting this money into a U.S. bank account 60 to 75 days. I'm going to recommend 75 from the time you start shopping for a home. That's at the stage where you should, start planning ahead, getting your pre-approval done. Speak to your loan officer about it. Tell them, hey, I'm looking to use cryptocurrency. But the bottom line is you need to put it into a U.S. bank account and let it sit there, all right, for a period of no less than 60 days, okay? That's what we call in the mortgage industry, that's called seasoning. It's sitting there seasoning in a U.S. bank account for 60 days. Now, when you go to qualify for the mortgage after you're under contract, your lender is going to ask you for the most recent 2 to 3 months of bank statements. And in there, they're going to be looking for large deposits, okay? So you want to make sure that during their look back period, that's not in there. So that's what the seasoning is all about. And by the way, the same thing goes for if somebody is giving you a gift in your transaction. Now, this could be a little different if you're getting a conventional versus a government-backed mortgage, but it's actually really easy to get around this with a conventional mortgage. So if your donor is gifting you money, all right, then my advice is to have your donor who's gifting you the money send that money directly to the title company, and then your lender will contact the title company to get a receipt, and that pretty much takes care of it. Again, this is if you're getting a conventional mortgage. If you're getting a government-backed mortgage, say FHA, VA, or USDA, the rules are not quite so clean cut, okay? So on those government-backed mortgages, the donor has to demonstrate their ability to donate the funds to you. All right. This may or may not cause a problem if crypto is involved, because during the process, we will be inspecting their bank statements. All right. And a lot of donors have a problem with this because they're not really applying for the mortgage, but it is a requirement nonetheless. Right. So when they supply their documents, and we can see that they were only, for instance, able to gift you that money because of a large deposit that entered, just before they gifted you the money, like for instance, they were giving you $20,000. They originally only had $5,000 in the account, but all of a sudden 20,000 went in, and then they give you, and that was from cryptocurrency, and then they gifted you $20,000. Well, that's not going to work, right? Because they're not going to be able to trace that money properly, all right? So again, it's treated the same as a large cash deposit. So this may or may not affect the donor. You know, if the donor was giving you $20,000 and their balance was, say, $25,000, you know, several days before, and then the day before an additional 10 or 20 went into the account, but they originally had the amount for your gift in there before the cryptocurrency deposit hit, well, then you're probably going to be fine, all right? But again, if that happens to you, you need to be planning ahead. So you need to, just like you're planning to season your money for 60 to 75 days, you need to advise your donor that the same thing's going to apply to them, especially if you're getting like an FHA, VA, or USDA mortgage. Otherwise, the rules are pretty clean cut, and I hope that information helps you. If you're looking to purchase, get pre-approved, or buy a home anywhere in the state of Florida, we would love to help. Thanks for watching. We really hope this helps you, and helps you avoid a loan denial during the process, and helps you actively use your gains in cryptocurrency for your benefit. So thanks again for watching. I'm A Bissen, and this is Unconventional Lending. Thanks.